Okay, welcome to TNABC 2021 edition. It's a pleasure to have you here today for a panel where we're going to discuss some new proposed rulemaking and other statements by US regulators regarding crypto wallets. I'm delighted to have with you today an all-star panel of lawyers and professionals that are working diligently in the area of crypto wallets, who are going to talk to you a little bit today about the proposed NPRM. And if we have time to get to it, the President's Working Group statement on stablecoin regulation. I'd like to introduce myself first. I'm your moderator. My name is Andrew Dinkes. I'm an adjunct professor at New York University, a lawyer with Carlton Fields, and delighted to join you today. Like I said before, joined by an all-star panel of lawyers and professionals in the industry, and I'll let everyone quickly introduce themselves.
Hello, everybody. I'm Matt Cohen. I'm an attorney at Carlton Fields. Good to work with Drew, which is an honor in and of itself. My job, for the most part, is to work with virtual currency companies in a lot of different capacities, work with exchanges, banks, core developers, even insurance companies, folks who want to dabble in the technology. Most of my work is related to corporate and securities matters with a little regulatory bent here and there. But over the years, I've seen some interesting stuff and very much looking forward to a discussion with this panel.
Thanks, Matt. Hey, I'm Justin Newton. I'm the founder and CEO of Netki. We're a company that does KYC, AML, and travel rule compliance for a variety of actors across the cryptocurrency space. I'm also a member of the leadership committee of the Anti-Money Laundering Working Group at the Digital Chamber of Commerce.
I'm Marco Santori. I am the Chief Legal Officer at Kraken. You can go to kraken.com, one of the leading crypto exchanges in the United States, Europe, and around the world. Before Kraken, I was the President and Chief Legal Officer at blockchain.com, and before that, a partner and leader of the global fintech team at Cooley LLP.
I'm Veronica McGregor. I'm the Chief Legal Officer at Shapeshift, a global crypto platform. And before that, I was a partner at Goodwin Procter. And before that, I was a partner at Hogan Lovells, all in fintech space, my whole career.
Fantastic. Okay. Thanks to everybody for joining us today. Wallets are obviously a core technology and a predicate to making any sort of decentralized system work. They are sort of a clumsy analogy, but really wallets are credentials that allow parties to interact directly with blockchains and to control and transact their assets. We first saw regulation directly apply to wallets in the 2013 FinCEN guidance and saw a substantially updated set of guidance in 2019. And most practitioners in the area feel pretty strongly that FinCEN has done an outstanding job in regulating their narrow jurisdiction, including the regulations around wallets. But Matt, I'd like you to tell us about a proposed rulemaking that was announced on 12/23 that would materially impact the way that wallets are regulated, and tell us a little bit about why this proposed rule caused some concern in the industry.
Yeah, sure. So, first off, we've got this process of rulemaking in the United States, and what that essentially means is there are government agencies and they get to propose changes to their regulations, and they give us, the general public, notice of that. That's the notice of proposed rulemaking. And they often will ask for industry input on these rules to sort of modify or validate what it is that they're trying to do. In this instance, for those of you who have been observing sort of what's gone on in this space for a while, you may have heard some disappointment or consternation from industry participants that this particular notice of proposed rulemaking was sort of what we call midnight rulemaking. And what that means is there was a very limited time period for the industry to weigh in. And that, coupled with the fact that this was, where I would probably one of the folks to give FinCEN some credit, over the years and how they've looked at this technology and attempted to be thoughtful about regulation. One could be forgiven for saying that this proposed rulemaking was a bit hasty. And fell a little bit short of what you would hope to see come out of a regulatory body that is as knowledgeable as FinCEN on these topics. And because of that, and because of the short window that the industry had to comment on this, there was, as I mentioned, a lot of consternation and concern over what this would mean if this rule was adopted and ultimately implemented.
Can you tell us a little bit about the substance of the rule, Matt?
Yeah, so break it down roughly into two parts. I mean, there's a lot that goes into this, right? But essentially, the first thing the rule would do is it would require banks and MSBs, that's money services businesses, to have certain reporting requirements to FinCEN, right? So you would have to report a customer's, some terms of art here, convertible virtual currencies and or legal tender digital assets. These are definitions that we can talk about in more detail as we get into the panel. But essentially, you're reporting some transaction and counterparty information, including names and addresses of these customers, and depending on some transaction amounts of the counterparty. Similarly, there's this record keeping requirement that, again, depending on transaction amounts and whatnot, you may be keeping, you meaning the bank or the MSB, may be required to keep records on a customer or a counterparty. Part of the reason that this, I guess, is important to our industry is much of the rule was targeted at what is referred to as unhosted wallets. That's essentially a wallet that you maintain the private key for, as opposed to a hosted wallet, which would be a wallet that the private key, if you will, is controlled by a regulated intermediary who's required to KYC you and get the necessary identifying information to onboard you, so they'd have it. But certainly, as you folks know, who if you've ever set up a wallet for any sort of cryptocurrency, there's no onboarding process, right? You download the software, you generate a key, and it's yours. So Drew, if it's helpful, can I just share maybe like one or two observations of why this is potentially problematic, and we can have the panel drill down into some of these issues? Is that how you want this to go?
Please do.
Okay, so I guess to keep it broad, right, this idea that FinCEN or MSBs or banks are going to be required to report certain information on unhosted wallets to FinCEN sort of ignores the technology that we're dealing with here. No single bank or MSB likely has the power to impose sweeping changes on a blockchain protocol. Take Bitcoin, for example. And the native protocol does not contemplate this sort of thing. There's no funds travel rule, in Satoshi's code, or the code as it's been modified in years since. So there's a sort of a practical problem and an ignorance of the technology when we're talking about this rule, in the sense that it would be an incredible burden for these intermediaries to be collecting some of this information just because the blockchain natively doesn't support it. And that's something that I think can't be overlooked. And I hope that some of our my esteemed colleagues on the panel will share some actual boots on the ground experience of how much of a disruption this can be for a company. I represent a number of them who, this could take years to develop a process to comply, and it would add incredible friction to the user experience, and it causes all these, major problems that many of the comment letters that were submitted to the government, talked about. And the other thing, to get a little bit more legal, I guess, is we've got this conflation of definitions, I would call it. The rule uses this term like monetary instruments, I suppose. And you've got to think about that in connection with the definition of convertible virtual currency and legal tender digital asset. And the point is, for those of you who deeply understand how wallets work, much more than just money can theoretically be transmitted or custodied in a wallet. Already, we've seen securities custodied in a wallet. We've seen digital art custodied through wallets. We've seen virtually anything that can be digitized and represented by a token custodied in a wallet. So this rule just brings up a lot of very concerning complications when it comes to the breadth of what FinCEN is doing. Should they be, surveilling people who are trading securities? That's a major legal jurisdictional question. If you were to implement a system to track folks who've been vaccinated for COVID-19 on the blockchain, something that's been talked about by professionals in the public health world, should FinCEN be policing transactions in connection with that? Now, perhaps that's a difficult example considering some of the way these definitions are worded, but the point remains, the breadth of these terms as used in this rulemaking is astounding, and it creates a lot of in my mind, very unworkable situations for folks who are actually dealing with the technology and dealing with end users who utilize the technology in any type of material capacity.
Great comments, Matt. Let's kick this open to the panel for any other comments or observations here.
Matt, you raised the issue, you raised the definitional issue, which is, I think, too often overlooked. It's probably the biggest consequence of this proposed guidance. Yeah, exchanges will have to report information. Yes, it's going to be burdensome. Yes, it's an enormous problem. No, it was not well researched, analyzed, or conceived. No, it won't give anybody the information they're actually looking for. But really, the foundation of this thing is really, it's troubling. The term convertible virtual currency has never been defined in law. Those of us who were around back in 2013 when FinCEN first published its guidance reacted pretty poorly to hearing that the whole universe of what these assets could be was going to be looped into the jurisdiction of one regulator and was going to be treated under a single set of money regulations, when really these blockchain tokens, back then we called it Bitcoin 2.0, now we have the broader term crypto, but when really these tokens could serve as representations of any kind of asset, not just currencies, not just money, which is what FinCEN is concerned with. But now what this rulemaking would do is sneak into law this definition that FinCEN made up 7 years ago and has aged incredibly poorly. The NDAA, the National Defense Authorization Act, has created a term convertible virtual currency as a matter of federal law, but has not defined it. That's going to be up to FinCEN. There should be a rulemaking. There should be a process by which they collect information about this, by which they learn what convertible virtual currency is, and more importantly, what it isn't today. In the 7 years since that first bit of guidance, the world has changed. It is not just Bitcoin anymore. There are securities, commodities, commodity derivatives, fuel for decentralized systems, tokenized swaps. There's a whole world of exotic and interesting assets, some of which we've never seen before, that would get roped into this definition, and that's not good government.
Veronica?
Yeah, I mean, while I agree with pretty much everything the others have said, my feeling is, and my sources are basically telling me that this is it's not going to, end up being, even though it's right now it's a proposed rule, that it's probably going to morph into being more like a CTR with no counterparty information required, and that's kind of like what we're going to end up with. Even so, I mean, it's less problematic, but it's not problematic. And so right now, as you might know, I'm dealing with other stuff. So I'm going to back burner that until I know what we're really wrestling with. But the haste with which the rule was drafted, and the incredibly truncated comment period, and the amazing number of comments received, and now we've managed to get an extension, I think, largely owing to the Blockchain Association, but I'm not sure, probably other people as well, extension on comment period. But just the same, my feeling is this isn't gonna be where we won't end up with having to provide the counterparty information, which is something.
It sounds like progress. I guess we're going to have to see whether the community's comments, which you mentioned were substantial, really moves the needle. I think that the additional time from the very truncated 15-day period, which occurred over the holidays, is obviously a positive sign that folks within the regulator are re-examining this and understand that the community had some very strong feelings about it. Justin, I'd like to kick this over to you to address a question that you're probably uniquely situated to respond to, which is a point that Matt brought up in his sort of introductory comments. Blockchains aren't designed to carry identifying information and addresses and and payment instruction information like was called for in this NPRM. What can we do about the technical issue?
Yeah, so I mean, look, a few comments around this, and one, I do want to go back and say I agree with 90% of what, everything was said in the previous section there. A few comments around that. One is the the US here, if they do go down this road of requiring identity around transactions with unhosted wallets, which I'm actually hearing different things from Veronica. I'm hearing it's actually pretty likely to continue to go forward in the new regs. We'd actually be following other leading regulators globally. Both Singapore as well as Switzerland have already got regulations in place which require network counterparties with unhosted. And there's other jurisdictions that have been looking at similar rules. And so, what we've been seeing is actually the regulators that dig in most around this issue and have been the furthest ahead on it are the most likely to propose rules similar to the ones that were proposed by FinCEN here. It also follows some of the writings inside of the FATF guidance that was Global Financial Action Task Force from the middle of the year this year, where they actually recommended that one of the main things requiring further study this year from a regulatory perspective was interactions with unhosted wallets, whether they be unhosted to unhosted transactions or from hosted services, like Kraken and others, into unhosted wallets. So there's actually a ton of momentum that's going exactly in this direction. A few pieces of good news, though. One is, as the previous folks talked about, the comment period has been extended to 45 days. And I think the clock started ticking on that, right around the 20th, when that new extension got written to the Federal Register. I actually haven't seen it yet myself, so I'm not exactly sure the date that starts ticking. The other is while you're right, the blockchain protocols themselves do not and should not ever support this exchange of information on the chains itself. It's a terrible, terrible privacy violation if it would exchange that information. There's actually been an approved Bitcoin standard since 2017 around how to support these requirements. Both between hosted and unhosted wallets. That's the BIP 75 standard, which actually I was a co-author on along with others. And there's been production services around it, such as the Transact ID service that we have at Netki that's been live since 2017, where we've actually built this solution out in partnership with global banks, PwC, and others, and was actually reviewed as part of an MAS, Monetary Authority of Singapore study, all the way back in 2017. So, this is something where there are technical solutions that are available that have been implemented that can include both hosted and unhosted wallets, and which can get up and running, not over the course of years, but over the course of a few months. The reason that we built this and designed this was when you sort of look at the regulatory track, it's was pretty obvious that eventually around financial services, we were going to end up needing to comply with sanctions requirements. And to step back on that a little bit, what sanctions really is I, as an American person, not even as a financial business or anything else, I can't provide any kind of support, be it financial or other, to, for example, terrorist organizations, certain countries like Iran or people operating in it, or others. And as a financial services provider, I'm actually required by law, if I am a financial services provider, to prevent my consumers and my customers from doing that. In Bitcoin with pseudo-anonymity, it's actually impossible to do that without having tools for counterparty identity. And so this was a reason that, frankly, from a regulatory perspective, we believe that rules like this are inevitable. They may not have happened up until today, but they're almost certainly coming eventually. And also why we wanted to ensure that there were tools that included these pieces of the ecosystem when we built and designed our solution. One of the big challenges with what FATF wrote in their guidance is they said, hey, countries, if you can't figure out how to properly regulate these transactions with unhosted wallets, you can just go ahead and ban them, and that would be okay with us. That would kill crypto. That's probably one of the most dangerous things that could possibly happen in the crypto environment. And so from us and from our perspective, it was incredibly important to ensure that there were tools available to the industry that would prevent that eventuality from happening. There's certainly others that are building tools generically around travel rule. None of them up until this point, unfortunately, have added the capability to manage unhosted wallets other than what we've done with Transact ID.
Wonderful. So now I'd like to kick this over to Marco. As the, I guess, CLO of Kraken, which has been an exchange and in other markets, I believe a commodities or an options or a futures exchange, forgive me for not knowing, you recently obtained a bank charter from Wyoming. Tell me about sort of broadly the transition from an exchange into a bank and how you think about the regulation of wallets as you sort of go through this change.
It's a great question, and it's actually a really timely one. And as much as this regulation favors us immensely, it's unfair because it only favors us relative to new competitors in the market. It favors incumbents. So one of the things that this proposed rule would do is require the identification of I should say require much more comprehensive identification, including the collection of a social security number from essentially all of the customers of an MSB. That's not the case today. That's not the case today for MSBs. It is the case for banks. So what it does is impose requirements on MSBs, which are relatively easy to start up in the United States compared to most other financial institutions. It raises those requirements to the level of a bank, which I can tell you now from personal experience is not an easy thing to create in the United States. It is patently anti-innovation. And it sounds strange for us, the beneficiaries of that disparity, to cry foul, but it's just too obvious to ignore and to not speak out against. So I'll give you a practical example. A lot of the crypto platforms out there, the exchanges, the wallets, the payment processors, they have what's called a starter tier of customer identification. You can be a starter tier. You don't have to provide full KYC. You can provide your name, address, telephone number, but you don't have to give a social security number. You don't have to answer knowledge-based challenge questions. You don't have to do all the things that require expensive compliance software providers, for example. And you don't have to do all the things that would close the top of your acquisition funnel. Instead, you can welcome customers in on a starter tier. And whoever's listening to this out in the audience has probably signed up for a starter tier. Kraken has one today. What this new rule would do is eliminate that, because MSBs, now just like banks have always had to do, will have to report much more information that is collected on that starter tier. Is that a problem for our business? No, it's a problem for new competition in crypto. That's bad government again. That is just bad governance. So stepping back and talking about what it means to build the country's first crypto bank, I have to say it's a masterwork of our compliance team and our legal team that came before me here. I was lucky enough to join just in time to help push it over the line. But it's a story that started in Wyoming, thanks to the work of some real crypto believers there, and culminated in the creation of the Special Purpose Depository Institution, the SPDI, a charter tailor-made for fintech companies, and crypto companies are a great fit. What it is a bank charter that permits the bank, Kraken, to take not only custody, like a lot of other crypto exchanges take, but also deposits. So we can take title, not just custody. Actually, we can take ownership over both, and this is one of the major innovations, over both crypto. We can hold the crypto. We can protect the private keys, But we can also, and we can also take title to the crypto. We can actually own the crypto. The innovation, of course, is that we can do that with dollars as well. We can do that with fiat currency, with government currencies. And so in months, not years, you should be able to see your crypto balance on the exchange right next to your checking account and your savings account, the balance, because they're right there. They're held at the same institution. And we chose that charter because there are bank charters available. We could have created a different de novo bank. We chose Wyoming for a lot of, I think, sound business reasons. And one of them is that most charters require you to lend. And this charter doesn't require us to engage in lending activity. We have the option to change charters into a more robust charter that would, but until then, this is a really good fit for crypto companies and for fintech companies more broadly. So head to Kraken.com now and take a look at some of the work that we've done, and you can open an account, and you'll be there in line for when the bank itself launches soon.
Great. Thanks for giving us a little bit of that perspective, Marco. Now I'd like to perhaps swing in the opposite direction and kick this over to Veronica, who's the general counsel of Shapeshift. And recently there was a pretty much ballyhooed announcement that Shapeshift was going to be radically altering its business model to a more decentralized structure. What can you tell us about this, Veronica?
Sorry, I don't mean to interrupt. I just want to say that this is the part of the panel that I've personally been waiting to hear about for a very long time. I think this is
Really?
so, I really, this is truly fascinating stuff. This is really cool. So if you have this on in the background, you turn the volume up for this part.
Nice. Thanks, Marco. No pressure. So let's see. In general, it's no secret that that leadership at Shapeshift, well, apart from me, who's a longtime, regulatory lawyer, has not thought well of KYC, but we implemented it because it was a way to de-risk the company. But increasingly, we've seen the decentralized exchanges, the DEXs, like Uniswap and such, outpacing traditional exchanges like Coinbase or maybe even Kraken, as far as volume is concerned. And so we determined that actually the best thing for us to do would be to serve as a sort of hub or a platform where people could do all sorts of, interact with all sorts of decentralized protocols, including the DEXs, and then soon coming things like where you can earn a yield on your crypto, or you can borrow against it or lend it. And using we're going to be using third-party vendors for that. We're not going to be engaged in any of the regulated activity. We're not engaged in the regulated activity of exchanging either. Prior to this switch, we were the counterparty to every exchange. So if someone wanted to trade their ETH for Bitcoin, we would swap them our Bitcoin in exchange for their ETH. And it was our own inventory that we were trading with. We didn't match buyers and sellers. We don't have that kind of an order book set up. So we weren't really even a traditional exchange. But we're trying to keep up with all the new technology and where people are actually gravitating. And DeFi seems to be the thing. And frankly, it's just easier for us and a better experience for the user to provide those services by way of third-party vendors, and we could be a centralized place where they can access all of that stuff, but we're not engaged in the regulated activity. Now, right now, because DEXs can't offer Bitcoin trades, we are still KYCing for Bitcoin trades. We're still the counterparty to those transactions for involving Bitcoin. But soon there will be new chains and new DEXs that can interact with Bitcoin, and we will connect to those, and we will stop trading altogether on our own behalf. We now have just integrated with the DEXs so that when users come to our platform and they want to make a trade, they get whatever the best rates are available at, whatever DEX it is. We will tell them what the price is, and that all that regulated activity happens off of our platform. We're just providing software basically at this point. So that's what we're doing. We, without going into granular detail, we're pretty confident in our legal analysis, and feel it's quite solid, given the laws, regs, and guidances put out by U.S. regulators. We're going to just talk about U.S. regulators right now.
A couple questions that follow up, Veronica. Fascinating, and thank you for explaining this. Does Shapeshift provide some sort of best execution like proxy if there are multiple DEXs that are offering the same sort of trade? Does it only connect to, say, one DEX with a pair, or does it connect to a variety of DEXs that might have the same pair?
I believe what it does is it finds the best pricing and lets you know. But that's more of a product question than a legal question. One of the other things I left out, and I shouldn't, is you might think, well, what about OFAC? And we still have in place the geofencing that we've always had. And we not only, blacklist addresses that OFAC has put out as addresses to blacklist, but we also participate in another group that, an industry kind of group that comes up with addresses to blacklist, and we participate in that group actively, and we blacklist all those addresses too. We have some great investigators, and we still cooperate with third-party law enforcement requests from all over the globe, and help track down hacked funds and whatever else people are investigating. That's
Anyone
all. I'll let you more questions.
Marco, you look like you've got a question.
No, I think it's a tremendous innovation, and I think it recognizes the direction of the market, which is this just marching toward decentralization and forming a foundation for a lot of decentralized services that are going to be run by machines, right? That aren't going to come to Kraken and open up their first user account and provide an ID selfie, right? They're machines, right? They're not going to do that. I think it's really, really interesting. Yeah, I think it's really interesting. I guess it'll be interesting to see what kind of information you guys end up collecting in the process of doing that, and the sort of aggregate information you would find yourselves with after a year of doing this, and what sort of trends you could pull from that information, and also what sort of information law enforcement would be interested in.
Yeah, I mean, the goal, of course, is to not collect personally identifiable information from people, and let them, interact with the DEXs, on their own, and interact with the other DeFi protocols that we're going to be, sort of providing a, software gateway to, essentially. But yeah, I mean, obviously this is it's an interesting play. Like I said, I feel confident in our legal analysis, but I wouldn't say anything else anyway, since I'm the lawyer. So right now, we're seeing the users seem to be really, really happy with it. We've gotten great feedback from the industry in general. And so we're going to keep rolling out new, different DeFi stuff, or connections to that.
Matt, did you have a comment or question?
Yeah, I just wanted to make an observation and sort of echo everyone else's sentiment that what Shapeshift is doing is really fascinating. And I sort of want to make a comment to the broader conference out there, if you will, that sometimes in these legal discussions, the minutia of what we're really doing here in this industry gets lost. And in some respects, we're in the middle of what many call a bull market. And you will always hear in the bull market that so-and-so banned Bitcoin, or somebody will, some nation state, which traditionally can crush virtually any foe. Any kind of regulated activity is within the purview of a nation state to regulate and to ban. And what we're really seeing here And what we're really doing, and what everyone on this panel, I think, for most part, has worked towards, is making sure that this activity, in the beginning, falls within these regulatory regimes and these frameworks, but also unbundles from them in many respects. And so, I don't want anyone to lose sight in how important it is to think through these business models, work with your legal counsel, and to find something truly innovative, because that is the sea change that we're seeing, which is a total change in the balance of power in the way regulation is promulgated and enforced, and the stakes are high with that sort of thing, and it only gets higher as more and more people see it. We see an influx of more and more people into this industry, and so I just want to commend the panelists for, number one, being at the forefront of this sort of thing, but also commend to the audience that this is tremendously important, and I encourage everybody to think about these things and see what can be done to further this sort of trend in the industry, and ensure that there is no China bans Bitcoin Reddit posts anymore, or posts on Bitcoin Talk back in the day, because they can't. At the end of the day, if this does what everyone thinks it's going to do, it's going to be really hard for any one nation state or any one actor to exert so much force over any one robust network to put the nail in the coffin, so to speak. And all the folks involved here are, directly bringing that vision to fruition. And I think it's important, and it shouldn't get lost in the minutia of FinCEN notices of proposed rulemaking.
Right. Right. Innovation is out there.
Absolutely. So I think this has been a fantastic discussion, and I'd like to thank all of our panelists for giving of their time to join everybody at TNABC 2021. I'd just like to kick this back to everybody on the panel if they've got any parting comments. I think Matt gave a really nice contextualizing comment reminding us that we're all here for innovative technology that can democratize access to financial services and eventually build, not just in accordance with regulation, but through regulation to innovate and provide services. Does anybody else want to share any closing comments before we wrap up here?
Yeah, I mean, I guess just a quick one from my side is, one of the things that we've definitely seen is that, as an ecosystem grows, the regulation will typically follow it. We saw it in the internet. We see it happening here. There's not necessarily a need to be afraid of that. It's something that can be handled and managed in the right way. I think in the same way that it is important to take a look at innovative legal approaches that are available as a result of the new things we're doing, I think it's important that we also look at solving these regulatory problems with new approaches that are focused on the strengths and weaknesses of the cryptocurrency and digital asset ecosystem, rather than just trying to recreate facsimiles of what happened in the centralized finance world. And by doing that, we can help to ensure that we can continue to have exciting, innovative, open and permissionless innovation, while still ensuring that the people that are doing that innovation aren't putting themselves at legal risk.
Great comment. Anybody else? Wonderful. Well, thanks everybody for joining us. I hope that you walked away from this panel with a little bit more insight as to regulation on wallets and some of the innovative strategies that have been embraced by some of our most important and significant intermediaries. On behalf of everyone on the panel, we'd like to thank you for spending time with us and wish you enjoy the rest of the conference. Hopefully in 2022, we'll be able to do this in person. Everybody, take care. Be